Hello, everyone. Welcome to another episode of the Doctor's Eyes Only podcast. I'm Lauren Oshman, and today we're going to talk about what I call the business version of you. Did you know that business owners actually pay taxes differently than most other individuals do? And that most doctors have a stream of income or can decently easily have a stream of income that qualifies them to be taxed at least partially as business owners? Before I dive into all of this, I do want to make sure that you understand I'm not an accountant. As a financial advisor, we do often work closely with accountants to help with client tax strategy, but I am not an accountant. So any of these tax-specific topics that I talk about, I will defer to the expertise of your accountant and recommend that you run any of these things by your accountant before you make a final decision. So if you think about your typical physician who is employed by a hospital system or a practice, like a typical practice setting, academic physician, they're going to get taxes paid to them via what's called a W-2. And if you're a W-2 physician, if you work in this kind of setting, this may sound very familiar to you. So what happens is you get paid by the hospital. They withhold taxes, right? There's federal taxes that come out. There's income taxes, Social Security taxes, Medicare taxes, that comes out. And then they deposit into your bank account what is left. So when you start spending your money, you're essentially spending what's left after taxes. When I talk about how business owners spend their money and are taxed differently, business income goes on a separate section on your tax return, what's called a Schedule C. This is 1099 income is what you sometimes will hear it referred to as. Some call pay will come via 1099. If you do medical legal consulting, you maybe consult with the pharmaceutical company, help develop some kind of product. More and more healthcare companies now, or like early stage companies, are asking for physicians to come in and be part of their team. So if you're getting income that doesn't have taxes withheld, that's called 1099 income. That money comes in. It has not yet been taxed. It's your responsibility to pay the taxes to the government. It's not taken out for you. Because that comes in on the Schedule C on your tax return, you actually get to fill in a bunch of boxes, or presumably your accountant will fill in a bunch of boxes with business expenses. Then what's left after those business expenses is what you end up paying taxes on as a business owner on that business income. So if you think about it, remember I said W-2 physicians get paid, pay their taxes, spend what's left. Business owners or physicians that have business income on that portion of their income get paid, spend the money on their business, and then pay taxes on what's left. So if we can get a decent chunk of money as business expenses, then you're paying tax on a lesser amount of money as a 1099 than you could on that same amount of money as a W-2. So this concept of sort of the business you and thinking about, well, myself as a business owner, how would I spend this money, or what things might I be buying that are helping me in my business, right? Presumably your business is some line of medicine, right? It's something that you're doing as a doctor. We do have some doctors that have like hobby businesses that are totally outside of medicine, but most of the time this is some sort of income stream that's tangentially related to medicine, or specifically, like I said, call pay. You do actually end up paying a little bit more employment tax on this 1099 income. So that's something that's important to know. And you will hear some people who say, oh my gosh, I'm getting taxed so much higher on my 1099. The reason is because when you're a W-2, you pay Social Security tax and your employer pays Social Security tax on that same income. So both of you are contributing 6.2% on each side. So it's 12.4% total in Social Security tax. When you're a business owner, you have business income, you are the employer and the employee. So you're actually paying both sides of that tax. Same thing with Medicare. So the employment tax side is higher, but again, the deduction potential is often higher as well. And we can use that to offset some of that differential. So what are things that could be business expenses or business expenses that physicians will typically take? Things like travel related to this work. So sometimes, like if you're doing expert witness type stuff, they may cover your travel for that. If you're working for consulting with a company, they may cover your travel for that. Any travel that they're not covering, you can pay for through your business, and that can be a business deduction. let's say it's something that's local to you and you're driving, you can actually take those miles, and the IRS mileage deduction, like they actually will kind of pay you for your business miles, north of 60 cents a mile. So that's actually a pretty good opportunity to save a little bit of taxes if you're driving for business. Now, here's something important to understand about that. The IRS doesn't allow you to drive from your house to your place of work and call that driving for business. You have to be driving from a business location to a business location. So if you're maybe covering call, right? We have a lot of doctors that cover multiple hospitals for call, or maybe they cover call that they get paid $10.99 for at a different hospital than the one that they work at every day. If you're driving from your main hospital to your call hospital, those are business miles. And there are phone apps that make it very easy to track those business miles. So that's something that you can look into. If you are driving quite a bit, that can be helpful so that you don't lose track of all of that. So business travel is one thing. If you have CME expenses that your hospital doesn't cover, you have dues for medical societies that you belong to, you have just extra conferences that you want to attend for professional development, those can all be paid for pre-tax through your business. Things like your cell phone, right? So you use your cell phone to take calls while you're on call. Your cell phone, at least the portion of that that's used for business, can be taken as a business deduction. Something that doctors have the opportunity to do that someone like me would not have the opportunity to do is deduct some of their professional clothing. So what the IRS says qualifies as professional clothing is anything that you can't wear, like that's not normally accepted attire in other situations. So when I think of, you need scrubs, scrub caps, things like that. I'm sure that you sometimes show up at your kids' soccer games or at clients come into the office to meet with me and they're wearing scrubs because they're coming straight from work, but that's not something that you would probably get dressed in to do your everyday. So that does qualify as professional attire for the purposes of the IRS definition of that. Home office, if you actually run your business, and again, we're talking about your 1099 income. So if that side business or that kind of side hustle is being run from your house, you can qualify potentially for the home office deduction. So that is the percentage of the square footage of your house that is that home office. And this has to be a location that is only for office. Like if it's a multi-use, if it's like a home gym / office or something like that, this doesn't work. If it's a dedicated home office and you do office activities in there for the business, then like you read scans in there or you review depositions in there or whatever it is that your side income is from, then you can take a percentage of your utilities, your home internet, your mortgage or rent, that percentage of the square footage of your office can qualify for that home office deduction. Business insurance. So depending on what you're doing, you may need some additional malpractice insurance. You may have some additional types of insurance for that business work. Those can be tax deductible through your business. I do sometimes get asked about personal insurance premiums and whether those can be deducted through the business. It really does need to be business specific insurance to qualify cleanly for that deduction. And again, I'm not an accountant, but this is we help clients strategize. We help doctors strategize on taxes and work in conjunction with their accountants in a lot of cases to make sure that we're optimizing these opportunities as best we can. So I would always defer to what your accountant thinks is going to qualify for these deductions. So oftentimes when doctors that we're working with will pick up this type of side hustle income for the first time, they're getting paid on a 1099 and this isn't something that they've historically been familiar with. And we'll talk them through this concept of tracking deductions or tracking business expenses for the purpose of deducting those off their tax return. They get a little bit overwhelmed thinking about just the organization that life takes in the first place, saying, how am I going to keep track of all of this, right? And I think a lot of us have kind of a picture of like you're saving every receipt and you've got some shoebox maybe under your bed full of receipts that you're trying to keep records for your accountant. It doesn't have to be that difficult, especially if this is not your primary income. So if you're making a lot of money on your side hustle and this is becoming a significant portion of your income, then we may consider talking to your accountant or finding you an accountant who can help actually keep books for your business on an ongoing basis. If this is just some money that you're making here and there for work that you're doing, we can make it actually a little bit easier than that. So for organization purposes, most physicians will choose to set up an LLC. I'm not an attorney, but most attorneys will advise setting up an LLC because this can provide a little bit of a firewall between your personal activities and your business activities, which can give you some liability protection for these activities that you're doing in your side hustle. So you set up an LLC, you can get a bank account for that LLC, you can get a credit card that goes with that LLC. And then what I do personally is I just carry my business credit card and my personal credit card with me all the time. And if I am spending money for my personal, I use my personal credit card. And if I'm spending money for my business, I use my business credit card. So if you get yourself a business credit card and you just make sure you use that, then I do save the receipts and I just quickly make a little note at the top of the receipt what it was for. Or let's say it's a business meal. I actually forgot to mention that in the deductions, but if you're having lunch with another physician and you all are talking about your business work, that could potentially be at least partially deductible. So when I'm doing those kinds of things, I'll just write at the top what the purpose of the conversation was and who it was with so that I kind of remember what those meals are. And then I just save all those on my phone. So all of those receipts are easily organized with a picture on my phone. There are apps, again, that will help categorize these things for you if you want to be extra organized with it. But then what you can do at the end of the year, you can just print out that credit card statement, the annual summary, and you know that all of those things, at least you're reasonably certain, are business deductions. So you can give that to your accountant. They'll just have to categorize those expenses for you. But again, if this isn't your primary business, usually it's not an exorbitant number of transactions to where that's hard to add up and categorize. So we've talked about there are actually a good number of opportunities to catalog business expenses that can come off of that business income. One of the bigger ones that we will often help doctors with, above and beyond the actual expenses that you're swiping a credit card for, is some sort of self-employment retirement account. So things like a SEP IRA or an individual 401k, depending on your situation, we can actually fund money into pre-tax, and that can make a sometimes meaningful difference, right? If you put $20,000 into a self-employment retirement account, that could save you a third, roughly, if you're in a kind of a typical physician tax bracket on your taxes for having made that contribution. So that's something I would always suggest talking with your financial advisor about. There are a lot of just formulas that you have to be aware of in terms of how to determine the amount that you can fund into that plan. Some of that's related back to your W-2 job, if you also have one of those, and how much is being funded there, because the IRS will limit kind of your aggregate contributions every year. Some of it is based on a percentage of your actual business income. So I would recommend sitting down with your personal advisor to figure out what that amount that you can fund actually would be. But don't forget that step, because that can make a meaningful difference in those business expenses. And then you have your income that's come in, you have all of your business expenses that you've cataloged, potentially a self-employment retirement plan that you've funded, and whatever's left over after that is what goes back onto the first page of your tax return and actually hits your taxable income. So that's where I say these business deductions actually can make a decent difference in lessening the tax burden that you pay as a physician. And we often like if we can design physician contracts so that we do have some opportunity for 1099 pay. Again, be that call pay, be that just the permission in your contract to do some kinds of side hustle work, that can be really valuable in your financial plan. Here's what I'll caution. It's easy to get into the mentality of racking up deductions and thinking, well, the more money I can spend on my business, the less tax I'm going to pay. And that is true. However, I think there's a danger spending money to save money, because ultimately you're spending more money. Here's what I mean. So you likely have a certain amount of money that you've kind of budgeted for paying your taxes, and that's kind of set aside in this tax account. If you're considering putting a bunch of money into a self-employment retirement plan, right? Let's say that you have the opportunity to max that out, but that's going to deplete all of the money that you set aside to actually pay your taxes, or it's going to deplete your personal cash reserve. And then you're still going to need all of that money to pay your taxes. Your overall spending is the amount it takes to fund that self-employment retirement plan plus the money it takes to pay the taxes, right? We've reduced the tax burden in funding that retirement plan, but we have not completely eliminated it. So we still have to think about the aggregate amount of money that we're committing to business expenses plus taxes and make sure that that fits the parameters of what we've kind of budgeted to be available for taxes and maintain solid reserves for your own financial strategy. So I think sometimes you can get ahead of yourself thinking about, I have to get all of this money put away because then I get the most deduction possible. I would always encourage you to look back at your bigger picture financial plan. So if you're working with an advisor, if you don't have one and you're interested in having one, stay tuned to the end of the episode. I'll tell you how to get in touch with our team. If you're working with an advisor, you should have a goal that you're that you are tracking toward, or potentially multiple goals that you're tracking toward, right? For your own work optional, for vacations you want to take, for a vacation home you want to buy, for your kids' education. And if you're on track for those goals without maximizing this self-employment retirement plan, then I think you have to be mindful of that and think about what is the best way to use the money I have tax efficiently, diversifying from a tax perspective. That's something your advisor's talking to you about as well, to make sure that I stay on track, but I'm not compromising any of the fundamentals that are really important to me in my financial foundations. So I would just encourage you to start with the big picture and work backwards to the steps that make sense to get you there, rather than getting hyper-focused on needing to pay the least amount of tax possible in every single year, because that may or may not make sense depending on your situation. Again, I'm Lauren Oshman, partner and CEO at Vestia Personal Wealth Advisors. We have a team of fantastic financial advisors who really enjoy helping physicians navigate all of these complex financial issues. So if you're listening to these things that I'm talking about today and you're thinking, oh my gosh, this is something that I need to get a handle on for my own personal financial life, you can reach our team at myteam@vestia.com. Again, email is myteam@vestia.com. We'll get that email. We'll get you connected with one of our advisory teams so we can talk about how these concepts might apply to your situation.